Welcome back to the Seven Figure Flipping Podcast. I have a fascinating one for you today. This is so current, this is real life. I'm going to give you the 5 reasons why investing in real estate is better than the stock market. First off, I went into my own stock account in the beginning of this year, and I don't put a lot of money in there, but I had about $170,000. And when I checked it last week, it was down to $140,000. I have zero control over it. I just know that I lost a meaningful amount of money. Now, a lot of you stock market people will say you didn't lose any money because you didn't realize those losses, meaning you didn't pull the money out, and over time, that money will grow. And that is true. But let's do a quick comparison on the top 5 reasons why I think that investing in real estate is better than investing in the stock market. Here we go. Number 1 is you have control over the asset. In real estate, you make decisions how to improve it, who to rent it to, how to finance it, and when to sell it. Whereas in the stock market, you're a passive shareholder. The CEO that runs that company, you have zero say. And in real estate, it lets you force appreciation through renovations, operations. You can do creative financing, and you can't really do that with, say, Apple stock. Number 2 is leverage with less risk. So, for example, you can buy a $500,000 property of basically an asset of real estate that's worth $500,000 with only $100,000 down on a conventional loan. That means you're getting an asset that's worth $500,000 and you're only having to spend $700,000 on it. If you were to borrow for stocks, then you would be 100% leverage, which means if I wanted to buy $500,000 of stocks and I borrowed the money to do that, it means I'd have $500,000 of debt. Now, margin accounts exist, but they're kind of risky and can wipe you out in a downturn. Smart real estate investors build wealth with other people's money, banks, private lenders, and getting deals at a great discount. You just can't do that in the stock market. Now, here's another thing. Number 3 is cash flow and appreciation. Real estate, you get monthly, semi-passive, and long-term appreciation. So semi-passive income, you have a mortgage payment if you've got debt on it, and then somebody's paying you rent, which is more than the mortgage payment, minus all your expenses, and you get net cash flow. It's kind of like a dividend in stock, but you actually own the asset. With stocks, you hope that it goes up, you have no real control, and you maybe get a percent or two dividend on a dividend stock. It's just not going to be the same. And rentals can generate real monthly cash flow, and it can be money that you get right now. That monthly cash flow goes to your bank account, as opposed to a brokerage account where those dividends are going back into your investment. You just can't spend it usually, unless you realize it, of course. Okay, number 4, and maybe my favorite, is that it is super tax advantaged. In real estate, you can depreciate that asset because it is a built property of some sort, and it does have maintenance and repairs and things over time, which the tax code is written so that you can write that off. So what happens in a rental property, as an example, is you collect rents and make cash flow, and typically you don't pay any taxes on that income, particularly the passive income, because you're depreciating that house over 27 and a half years. Now, in stocks, you're going to pay capital gains. There's no depreciation. There's not always a tax advantage. Don't get me wrong, certain accounts, Roth IRAs, have some tax advantages, but it's not going to be against your active income like you can get with real estate professional status, and probably not against your passive income. You can earn $100K in real estate and pay $0 in taxes, legally. Let's see you try that in the stock market. I just don't think that's going to happen. Okay. Number 5, tangible, insurable, and understandable. You have 3 things you need as a human. You need food, water, and shelter. Real estate is that shelter. It is a tangible asset. You can see it, you can touch it, you can insure it, and you can understand it because you live in a house. Everybody knows a house. If you try to read a prospectus on Apple or Twitter or X or any of that stuff, it's going to be nearly impossible for most common people to understand unless that's the business that they're in. And stocks are, frankly, they're abstract, they're volatile, they're prone to irrational moves by institutional traders. You think about what's happened of recent time. The tariffs were announced and it basically crashed the stock market for 3 days in a row. And that's how I went from $170,000 to $140,000. Now, there are things in the economy that do help push the values of real estate up and down, but there's ways that you can buy real estate where the value of the property could be irrelevant so long as you can always service your debt. So there you have it. Those are my top 5 reasons why I personally believe real estate is a better investment than the stock market. Now, my disclaimer is I am invested in the stock market. I'm not saying it's not a good investment. I'm just saying that real estate is better. So if you agree with me, I want you to leave a comment wherever you're listening to this. If you don't agree with me, I also want you to leave a comment and tell me why. And then lastly, if you get value and you're a listener who's just coming back to our podcast, do me a favor and leave us a 5-star review. And if you need any help in real estate at all, and you think you want to learn more about something specific, just send us an email at info@sevenfigureflipping.com and we'd be happy to help you. Thanks for listening. I'll see you on the next one.